I think central banks today are trying to keep all their options open. They're trying to send a message of reassurance that they're trying to obviously do whatever it takes. They use different sentences, but at the end, everyone says we're going to do whatever it takes, what we need to do. They're not going to rule out negative interest rates. I'm not sure we're going to see a lot of those negative interest rates. I think central banks have experimented with it, and those who did are not too convinced that that's the right way to go. For example, the Central Bank of Sweden certainly said that maybe what we did with negative interest rate did not have major benefits. So I'm not sure the UK will go there, but for sure they'll keep the door open.
Right, and how worried are you about all this talk about negative rates impacting sentiment in general? Because it can be crippling for the banking sector as we know it, the traditional banking model as we know it, with the impact coming in on deposit rates as well as lending rates, is squeezing bank margins. And not just that, a lot of banks do park money with central banks. So, you know, that part of the equation will also impact their treasury operations.
I mean, correct. It's a complicated question, the one on negative interest rates. If commercial banks have to park money at the central bank with a negative interest rate, their profitability is going to go down. It's very hard for them to keep up running their business. But you have to realize central banks are being smart about this. Think about the European Central Bank. They're now lending money to banks at a rate which is lower than the deposit rate. So you can borrow from the European Central Bank at -1% and then redeposit that in the European Central Bank and get paid a -0.5%. So implicitly, these negative interest rates could turn into a subsidy to banks, as the European Central Bank is doing. So you have to be smart. There's not just one way to do negative interest rates.